Hello, everyone. Simon's here with AvaTrade. Happy Sunday, everyone. And I hope that you enjoyed your weekend, and of course, that you had a good week prior to that, and that you're ready for the upcoming week. We're going to talk about a lot of things today, some interesting things about stocks, market in general, things that happen, and things that are going to happen. So I want to welcome everyone. And for the new people, the idea of this webinar is pretty much reflected in the title, the weekly trading plan. And the idea is really to have a plan. And as I always say, and I'm quoting, I'm not sure whom, it says you plan the trade and then you trade the plan. This way you have less issues, I believe, and this is the opinion of many traders, that it is important to have a structure and direction, some kind of idea in general and specifics as well. So we'll be talking about those things. A few things about me. My name is Simon Friedman, and I'm working as a senior account manager with AvaTrade. My past experience uh, includes 22 years total in the industry. I started as a proprietary trader back in New York. I did it for about 11 years, and after that, I started mentoring and educating traders. And as of now, I'm working as a senior account manager at AvaTrade. And we'll be talking about, as usual, indices, stocks, commodities, and FX world. You can follow us on our channels at AvaTrade on Telegram, on Twitter, and of course, my favorite, the YouTube channel, has a tremendous amount of information that's being updated on daily basis, and I highly recommend for you to sign up. And you can also click on that bell there, so you'll be notified when new things are being added. And as usual, of course, the risk management, the risk warning, not the management of risk warning, that everything we do here is just for educational purposes. You can read it later, and then you can access a full statement on our website. Okay, so let's move on. Before we go into this economic calendar, I just want to, as usually, speak first about the big picture and see what's happening on the markets. And as I said last week, it was a short week. We had the Memorial Weekend in the States. Then we had the celebration of the Queen in England. So it was pretty much a short week. And the culmination of it was the NFP numbers from the States, which really caused the market to sell off. We'll be looking at a few things at the moment when we turn into a terminal. But what happened, they really had the great numbers on employment. We added 390 jobs in May, which beats the expectations. We had unemployment at 3.6%. So this is the case when the bad news, I'm sorry, the good news is the bad news. Why? Because as we said many times, the Feds are looking at a few things, and the two major things in this, that's the employment situation, and they're looking at inflation. And this was it. We had the great numbers on employment, and then the market took it as Feds are going to continue more aggressively their tightening policy, and that's why the market sold out. We'll be looking at it in the moment. So this is the calendar, and I just want to repeat the same thing that I say every week. It is important to know things, whether you follow the fundamental or technicals. It's important to know at least, and that's just my opinion. Again, you can take and do whatever you'd like, but I follow the economic calendar just for the reason of knowing that certain things are happening, so I wouldn't get caught by surprise. So it takes a few minutes. You can open it on the weekend and make yourself a plan. You can make notes or put yourself reminders. And what I do here, I just take out the high impact data. So you could see everything in red. and there's a mid impact and low impact. You can find and filter it, and there are many providers of these things. So let's move on and see what's waiting for us as far as the announcements. So Tuesday we have interest rate from Australia. So of course that would be logical. The Australian dollar will be affected by it. We have GDP numbers from Japan on the same day. Wednesday, GDP numbers from European Union. We have interest rate decision on Thursday from European Union, that followed by monetary policy and a press conference of European Central Bank. The same thing actually is happening next week. I'm jumping a little bit ahead of myself in the United States. So this time is the euro, and we'll be taking a look at euro. Actually, it's been strong in the past days, stronger than other currencies against the dollar. So that's on Thursday. Friday, we have CPI numbers. That's the inflationary numbers from China. And this is very, very important, the US numbers. So following NFPs, which was positive but disappointing for the markets, again, I'm saying it again, the Fed's taking a really close look at employment, and as long as employment is great, they have a space to more aggressive actions. So we have the other part of the equation, the inflation numbers on Friday, very, very important. We have also unemployment rate from Canada, and we have Michigan consumer statement. Oh, sorry, consumer sentiment. That's pretty much what consumers are thinking, how they're feeling about the economy in general. So these are the things. Again, you can research your own things and make yourself a note for your own trading. Okay, so let's move on now to the MT4, and I have a surprise for you. I don't know if you heard or not. I'm sure the ones that are trading stocks probably heard that Amazon is finally splitting. They announced it a while ago, but Monday the actual split takes place, and it's already reflecting on the chart. So that's a public information. On Monday, Amazon will be opening at $122 per share. So if you see this huge gap from 2000 plus to 122, it doesn't mean that Amazon lost this much money. And I will explain for those of you that kind of curious or confused about it. Pretty much what happens here, it's like you had a $20 bill, and Monday you have 20 singles in your pocket, but the total is still $20. So that's a simple way of putting it. They're splitting 20 to 1. So for each shares that you own on Monday, you would have 20 shares, okay? And the price is adjusted, so the total would be the same. I'm not gonna go deeper into it because I think it's very, very simple. And if you have any specific questions, please address it with your account managers. They'll be happy to explain. So Amazon. Now, a few things. Of course, it's going to be very, very active trading in Amazon on Monday. Why? Historically, or technically, or usually, whatever word you want to use, the moment the company splits from the high, super high price, sometimes they do 10 to 1, 20 to 1. This time it's 20 to 1. I think it's the third time Amazon is splitting in the history. They had small splits, and this is the big one. So usually common sense says, okay, the shares at the 122 are more attractive than at 2,500. So normally would attract more investors into this action. And it could happen. Another thing why it could be positive for Amazon, according to analysts, that at this price, actually Amazon could be a candidate to enter the Dow Jones index at these price levels. Now, if you remember a few weeks back, I spoke about Amazon, and I said when the market sells off, or if the market sells off, there's no certainty, of course, that Amazon would be really, really selling. Why? Because other stocks give investors pretty much good profits, and Amazon didn't really do much the whole year. So, and that's what happened. Really, we were selling on Amazon. So now with the split, maybe the investors are going to jump in more and drive it up. Anything could happen. But and I'm just sharing with you what the general idea of the splits. normally it would attract more traders and the price would really increase, the price per share. So we'll see. Again, official opening price 122 on Monday. Next one, Tesla. Our favorite Tesla. A lot of controversial things. As we know, the Twitter shareholders are suing Musk for really causing damage to the stock with all the issues of buying Twitter, not buying Twitter. It's still in discussion. Now, another thing that happened on Friday on Tesla, really the stock fell down about 9%. Musk, he announced that he's going to be cutting forces by 10%. And also, I read another thing that he wants everybody to work from the office. Either you come back to the office or you just leave the company. So maybe those things are together, this requirement or request and his plan of cutting 10% of the force of the company. So let's see what's next for Tesla. Technically speaking, this is the level here for which we bounce and we stop right there around 700. Of course, psychological number at 700. Like I said, we dropped 9% on Friday. So we are having a full week. We do have a few announcements. And of course, after the NFPs and a lot of publications, a lot of millions of opinions of analysts, we'll see what the Wall Street will do when the market opens on Monday. So that's Tesla. Microsoft. Microsoft really um, kind of disappointed the market at the opening. They revised the guidance for the next quarter, but then the stock kind of recovered. So we opened and closed pretty much at the same prices. The open was 269.81 and the close was only 20 cents lower when the market in general sold out. So Microsoft is the kind of the one to watch next week, see if it holds, and maybe will help the market hold as well. And another thing that caught my attention is Uber. And if you remember, we spoke about Uber a while ago when the CEO, I think it was around here, uh, December or March, don't really remember when exactly it was, but CEO was saying that he expects great results and the expanding and so on, and then the sell-off really came. So why am I talking about Uber now? Purely technical. It was a lot of consolidation here with the market going down, but we didn't really sell off here. And then Thursday were the up day, of course, with the market, and Friday the market sold, but Uber actually had the green day. So one of the things that we can plan for the upcoming days and weeks is really seeing maybe that golden time that promised by CEO is really coming. I'm trying to be sarcastic here. So it's very simple. We tried to break these levels a few times. High here, 24.85. High here, 24.87, and on Thursday, high 24.80. So we need to close, I guess, the key level of 25 and establish kind of a support there. And then from there, we have a pretty much an opening to go higher, possibly reaching the 50 moving average here. So again, for that to happen, we need few things. We need, in general, the market to be alive and have some signs of positivity, and we need to be closing above, at least above 24.90. 25 would be even better. So Uber to watch. Now let's move to indices. Of course, we talk about the stocks, pretty much the same thing. The stocks are kind of within the indices. And we'll start with China. As I said last week and the week before, China is a very important indication now because they had issues with COVID and shutdowns and everything else. And if you take a look on Thursday, it was the first sign of really, wow, we're breaking out of this resistance here around 13,500 that I mentioned. And then take a look what happened on Friday. We had a really robust move. I'll show it to you on the 1 hour chart. And then we just sold out and we right below the 13 and a half. So we're at the 13,510 closing. So again, China is still in focus. if China has no energy to run up, it's just gonna add more gravity to the all the markets, U.S. market, of course, to go lower. Nikkei also, we really tried. We tried breaking out of these things. They called resistance, and this is the level here, 27,755. We couldn't break out of it. We tried. Thursday we reached that level, and then Friday we sold out in general with the market going lower. S&P 500, as we mentioned, US indices are really struggling to break above the 50 moving average. We did try on Thursday. We hit straight to that level, and Friday, of course, the sell-off happened. I just want to show you the time when the sell-off started, and that's with the NFP numbers coming out. We just continue selling from that level. So what happened in general? Just to give you a big picture about indices before we go further to US indices, we have Dow Jones is down about 9.5% this year, and Nasdaq is the biggest loser. It's down 23% on the year. So let's take a look at them. So we said S&Ps hit the 50 moving average and sold out. The same thing, I think I remember exact words that I was saying, that Dow Jones was really massaging this 50 moving average. We did close above it on Thursday, but Friday the storm came down after NFPs, which is sold out. And here comes the biggest loser. Like I said, it's down 23% since the beginning of the year. So we didn't really touch the 50 moving average. Thursday was a strong day, but we didn't touch the 50, and now we almost erased the Thursday advance. So what's next? Well, before that, let's just quickly go through Europeans. The French index sold out a little bit. FTSE, if you remember, I said that this level here, 76.20, 76.30 would be a very, very strong level and very important level. We couldn't break it so far. And then just, of course, the general sentiment went to the downside, and the FTSE just sold out. And we raised on Friday, 3 days of advance. Actually, sorry, it's not a Friday. The market was closed in the UK, so this was the 1st of June. Since then, we didn't trade it. My bad. DAX also trying to really have some strength, and we similar idea. We can't break the previous resistance here. This is the 14,616.5. We're really hitting it here, here, and Friday we just give up and went lower. But we are sitting on the 100 moving average, so it doesn't look that weak. And we have some data from Europe this week, and maybe we'll have some advantages for the DAX to the upside. Okay, so again, indices, a lot of pressure. Just to put it all together, a lot of pressure. We still have high gas prices, oil prices. We'll be talking about oil and gas in a moment. Inflation is really making everyone struggle. The cost of living went higher, and the indices are moving lower. All the indices, including Europeans and US, of course, had pressure from the latest NFP data on Friday. So I think we'll wrap it up here with indices and move to commodities. And here's the famous oil. Now, just to remind everyone, oil had very interesting week. We had a move down the moment the Saudis or the OPEC said they're ready to pump more and kind of cover for Russian oil that's missing. And we know that the Europeans are really trying to impose the embargo on Russian oil, and they're looking for alternatives, maybe buying from Saudis or other parts of the world. So we did have a reaction to the downside initially, and then Thursday and Friday, oil just went up, and we closed at about 120. So again, what this week brings, it's all geopolitical, of course. It's all to do with the war that I'm not going to even talk about. It's really a sad topic for me. And we could be seeing continuation to the upside. There's no there's no certainty of what's next. There's no idea how long the war is going to be there, and of course, China plays the big role, and oil. Beside, you see, this is the thing. Oil went up despite the market being weak and the China selling off, and the oil really closed on the highs. So it's a very strong sign. Now, is it the real move? Are we going higher? Could be. And if that's the case, we probably should see how we react around 125, 126, 127. Again, we could go as high as 130 and a half. That's the recent high as well. So we'll be seeing again what the market will be doing, what news are coming out from the oil producers and so on, whatever statements are coming out. So this is oil. Now, natural gas, it's really, like I always say, has the life of its own. It could be just sitting there for a while and then just out of nowhere jump like it did here, like it did here. So it's hard to say, but it's the same situation. It's all geopolitical and it's all Russia related. So if we should go higher, of course, $8.90, $9 is the next level to retest. And should we go lower, this large candle could be an indication of possible support, because from here we made the high. So the low of this candle is 7.95, and if we are seeing a sell-off here, so this 7.95, it could be a support and would hold the price before the move higher. So these are the key levels we'll be watching. Again, on the upside, 890, on the downside, 795 on natural gas. Now, when I give you these levels, these are not, precise levels. This is just the areas around these price levels. And again, I'll explain the reason. This is where we stopped the initial move higher. The high here was 890, and this is where we stopped the move lower before the tail. So this large candle had bottom at 6. Sorry, that's not the one I'm watching. This candle here had a low of 795, and we held a lot of actions here. So that's natural gas. Another one, heating oil, very strong. We just broke through the previous resistance here at 426, and we could be on the way to retest the highs, and that would be around 460, 465. There is a possibility. It's been going up straight. It didn't have a red day for a while. So again, few scenarios. We can continue straight to the upside, and considering that we didn't have a correction, we might at least retest the 426. And if we are holding strongly here and not closing below this 426 level, we might continue. And on the weakness side, if we start closing below 426 and really building a strong resistance, we might slide lower and retest at least the 50 moving average over here. Or of course, psychological level of 4 could be coming before that. So that's the energy commodities. Now gold, let's take a look at gold. Gold really sold out, and of course it's all inflational, and the yields on the 10-year bonds, they went back and touched $3 again, and the gold is very sensitive to that. So we had a sell-off after a decent move here in the past 2 days. Wednesday and Thursday we went to 1870 area, and then Thursday with NFPs, the market selling and the yields climbing again to $3. We had a sell-off, and something bearish here. Besides just the candle selling, we really closed below the 200 moving average again. So here, take a look. The moment we close here with the sell-off, we came above it, we really stuck to it. It was a magnet holding it. Then we closed lower, we came right back above it, and then we closed lower again. So again, we could, if the market is doing what it's doing, the yields are getting stronger here, we might see gold going again and retest around 1800 as well. And as we said, we have more inflational data coming coming this week to see it. So that's gold. Soft commodities really quick. We're holding these levels on the wheat after this recent sell-off. So we close at 1040. We're right between the 50 and 100 moving average. It looks like we're building some kind of support around these levels. What it means, we might have accumulation before the move higher, and for it to sell, we really need to be closing below 1030 or 10, yeah, about 1030, and the opposite could happen. We can sell off. But again, fundamentally speaking, there's a big issue there. The Ukrainian wheat is still not being shipped. As we know, the situation there is really, really hard, and there is a risk of really starvation in certain countries in Africa because of that. So, and just to remind those of you that or to let you know, the ones that were not in our previous meetings, last week or the week before, I don't remember exactly, India announced that they're not going to be exporting or selling any wheat outside the country. So that's also, I think this was the move here. So we are kind of sitting here on the support level, and fundamentally speaking, and technically as well, we might be, after this accumulation, we might be trying to have another leg to the upside. Corn, same thing. We're sitting on the support here, and we're sitting right on the 100 moving average. So it also could be a sign of continuation to the upside. We'll see what happens there. Okay, so that's it with commodities, and we'll move to the forex world. We'll start with dollar index, and here's dollar index. As I mentioned to you last week, that we're gonna retest 50 moving average and see what happens. And really, we didn't have a closing below it. Take a look, we hit it. Then the following day, we went higher. Then with a very strong day on Wednesday. Thursday, we just raised the Wednesday gain. And Friday, about 50% move to the upside. Again, we are holding really, really strongly the 50 moving average. So as with the latest thing with NFPs and the mood on the street, the Feds are going to be more aggressive with the interest rates and the tightening policy. The dollar reacted to the upside, and we are expecting a possible continuation to the upside. And of course, first of all, we will be retesting the recent resistance here, and that Wednesday level was 102.73. Just to remind you, recently, really a few days back, we were at 105. So if we are experiencing the move higher and the closing above 102.70, 102.80, we could be ready for continuation to the upside and retesting the recent highs around 105. So that's potentially the scenario. Now, of course, always the opposite could happen, and the opposite, we would need to retest 101 and a quarter and see if we're holding there. And of course, we should see the closing below a 50 moving average to give us a signal that there is a chance of a selling of a dollar, but all the fundamental things showing for the strength of a dollar for now. So possible or the more possible scenarios to the upside on the dollar. Now, let's take a look at the major currency pairs. And I told you that I'll be talking about euro as we are having data coming in. Euro has been very holding strong against the dollar. Even on the strength of a dollar here, just to show you here, dollar gained about 50% from the previous day's loss. That's as an index, right? But it doesn't reflect the same on the euro dollar. Here it's about the third, maybe 20-30% retracement. So euro has been holding strongly for some reason. Maybe we will see some surprises and increase in interest rate that will be aggressive, that will add to value of euro. Because just to compare, take a look, just remember this picture as euro looks against the dollar. Now take a look at the pound, much weaker. Take a look at Aussie dollar, much weaker. New Zealand dollar, much weaker. Swiss franc, much weaker. So dollar is showing, technically speaking, it shows more strength than other currencies against the dollar. So we'll be watching that. Now, another one, it's of course my favorite, the yen. Why I'm saying the favorite, it has a lot of action because usually it doesn't really have much action, but lately a lot of pressure on yen. And take a look, we back to the strength of the dollar against the yen, and we're on the way to retest the recent highs where the double top here. The first time we touched it was the end of April. The high was 131.24. Then we touched it again 9th of May, 131.34, and we could be on the way to retest that level again. So yen is being really, really weak again. It was a nice correction here. We came, we retested, we went as low as what, 126.50, I believe, was the low here, 126.35, and then we had the accumulation here, and then we bounced right back. So we on the way, possibly retesting 131 and higher on the yen. Now, if we're speaking on yen already, the other currencies had a very nice move against the yen as well. Aussie, New Zealand dollar, euro. As I said, euro is stronger than other currencies against the dollar, and as you could see, it was stronger against the yen and had a tremendous move higher. Take a look. We broke and we closed above this high of 139. It's a very bullish sign. Let's take a look how the weekly chart looks, and looks very strong here on the weekly. And on the monthly, we are we could be seeing continuation to the upside. Let's take a look. We actually currently, as we going higher here, we approaching the levels of 2015 on euro yen. And another one to watch, I'm going to put it on my radar, is Canadian JPY. Similar idea, has a very strong move higher, straight up from 98 to 103, almost 104. We did touch 104, I think. Yes, 104.09. So yen is weak, and the two strongest currencies against the yen is euro and Canadian dollar. Now, and of course, just to remind those of you that not aware of it, Canadian dollar is very, very sensitive to oil prices. So as the oil getting stronger, Canadian dollars, Canada is one of the producers of crude oil, is moving higher. So again, yen, I mentioned it's my favorite because it moves lately really, really a lot. And we'll be watching what's next for yen. We'll be watching the upcoming decisions from Bank of Japan and see if they do something. Just again to remind you that Bank of Japan, they're really concerned about this weak levels of yen. For years, they had the opposite issue. They had an issue that the yen was very, very strong, and they tried to intervene and weaken it for a while. They didn't succeed, and then recent move high was kind of okay for them, but then the moment we broke through 124, 126 levels, they start really saying that it's hurting Japan on the buying side, because they do buy a lot of commodities, and of course they pay in foreign currencies for that. So let's see, they're trying now to intervene the other direction to really bring it to the lower levels. Let's see if they succeed. So that's as far as currencies. Again, to put it all together, we have inflation that is pushing the Feds to increase the rates and tighten their uh, policies. And just to remind you, they unloading now the the huge amount of securities that they purchased in the past years, and they have a total of 9 trillion, I believe. So they're unloading now each month, not just increasing the rates, but also unloading those securities that affecting, of course, the market. So dollar, because of that, is experiencing move up after the recent sell-off, and of course the other currencies. And we did mention the euro is being strong. and Canadian dollars being strong. So those two. And that's it pretty much with Forex. And let's just take a look at Bitcoin. Bitcoin is, of course, if you remember, we spoke about it, that it's been lately going with the equity markets. The sell-off on the market really showed this sell-off on Bitcoin as well. For those of you that are not aware, there are a few issues on other coins that caused in general for the cryptos having really a bad reputation, and a lot of investors and traders left these instruments after losing a lot of money in it. So we did have a recent attempt to go higher here, and that was on the 30th of May. The end of May, we went to 32,000, a little bit higher than that. It was looking very hopeful there, but we just came right back below 30,000, and we're sitting around 30,000 on Bitcoin. So again, what's going to be there? We're not going to speculate and make any predictions here. We'll be watching what in general is happening in the crypto world, and specifically in Bitcoin in this case. And we'll be watching the equity markets. And of course, the strength of the dollar is not helping Bitcoin here. And that's it pretty much for today's webinar. I want to thank everyone for coming and being with us, and I want to wish everyone a successful week. Have a plan, manage your risk, be smart, and be happy. All the best. We'll see you next week. Take care.